Good morning, everyone. We are team 102, and we were supposed to do analysis for the fund number 2, 4, 6, 8, and 10. And we have done detailed fund analysis for fund number 2 and 8. Fund 2 style analysis. Fund 2 style analysis shows us the objective that investor is holding is to invest in European region fund, and the investment strategy he is following is passive management. As passive management funds do not require much attention, and they are majorly focused on matching the benchmark of the fund. Here the investor is and if we look at the asset allocation contribution, it is around 0.7256, and for the selection contribution for in the fund 2 is 0.2743. Fund 2 sub-period style analysis. We did a sub-period style analysis for in first 40 months. We can see that the fund manager has invested in the European region funds. In second month he increased his investment but maintaining the weights, and by increasing the weight little bit weight in European region funds, he has decreased decreased his investment from treasury bond funds. But in third quarter, like in next 40 months, the last 40 months, we can see that the investor has, or the fund manager has invested in US equities with 0.2337, and maintaining also here he has tried to maintain his major investment in European region funds. This slide shows the sub-period style analysis asset allocation. We can see that the fund manager has maintained his asset allocation and as to the constant 74% throughout the period. Fund 2 detailed analysis. This is what the diagram came up after we did our style analysis for the three sub periods. Now for the first 40 months, we can see the investment are done in treasury bond funds, small cap funds, US equities, and European region funds. But as we go towards the second quarter, like the next 40 months, the investments were same. But as the investor was moving towards the last 40 months, he started buying US equity large caps, FB funds, and LP in small amounts, and gradually he started diluting his investments in treasury bond funds, in small cap equities, and in European region funds. With this, we can see that the investor or the fund manager has been constant throughout while investing in the European region funds, but side by side he kept on increasing his investments in other funds as well.
Fund 4 is an interesting case. There is a large dispersion and overall strong portfolio diversification of funds. However, the two main funds are the corporate debt funds at 24% and the municipal debt funds at 33%. We can conclude that this debt is targeting debt funds, since 57% are within that category. Furthermore, due to the diversification, there would have to be an active management. The selection is around 40%, which means that they are seeking a higher alpha, but this is not as apparent as Fund 8, which will be discussed later. The 60% asset allocation contribution and 40% selection contribution shows that this is an active management, but not as much as it would be in Fund 8 for this style analysis. For Fund 6's style analysis, we can see a quite passive to neutral management, with 55% going to mid-cap value funds, 16% going to large growth funds, 4% going to small cap value funds, 18% going to the European fund, and 6% going to the Japanese fund. Right off the bat, we can see the emphasis on the mid-cap value fund, meaning that we will be analyzing the fund using the FAMA French three-factor model on the next slide. Furthermore, the objective is to invest in the mid-cap value fund and not to be as active in the selection, given the almost 80% R squared, which is the asset allocation contribution. Since over 50% of the value of the funds were in American funds, we conducted a FAMA French three-factor model analysis. Using this regression analysis, we have a correlation coefficient of 0.887 and an R squared of 76.68%, meaning that about 79% of the variation of the returns are explained by the three-factor model. In this specific case, we see that alpha is extremely close to zero, being more equal to negative 0.0011828, thus meaning it is not statistically significant. Therefore, the three factors in the model account for the variation, with the betas of RMRF being 1.03, small minus big being 0.38, and high minus low being 0.04.
So moving up to style analysis on fund number 8, we see that in this case there's a 30% going on US Treasury bills, 33% going to long value stocks, 26% going to small stocks, 9% to European, and 2% Japanese. So in that case, we see that there are 3 different regions that this investor is allocating its funds, diversifying its country risk. So we conclude that this could be an international fund. And the investment strategy, we conclude that this is more active, given that the selection part is actually higher than the asset allocation. We see there's a 54% on the selection part versus the 46% asset allocation. So this must be a very active investor, which is constantly looking for more alpha. We also see that the weights on the US stocks are higher than 50%, so we must do a FAMA French analysis in this case for the next slide. So moving into the regression, we see that we have a correlation coefficient of 76, an R-square of 58, which means that 58% of the variation in the returns are explained by the three-factor model, which is the market premium, the small minus big stocks, and the high value minus low value stocks. In this case, we also see that the alpha almost goes to zero, and it's not statistically significant, so we can be sure that alpha is most likely zero, and therefore the three-factor model accounts for all the variation that we see in the returns of fund number 8. Doing the style analysis for 3 subperiods, we check that this investor is not too consistent on his asset allocation over time, given that the treasury bills remain very constant on the first 2 periods, but mostly disappear at the end. Then we have the long value stocks, which are basically zero at first and end up being 41% on the last period. We also see small stocks getting smaller on each period, and finally European funds are added in the middle of the period and growing larger on the most recent data. Doing the same subperiod style analysis for fund number 8, we see that this investor in general is more consistent on this part, doing a more active management and not just reflecting all the different indexes on the benchmark, given that there's a more variation on the selection part here, which is almost 50-50 during the period, which means this investor is constantly looking for more alpha within the asset classes. Checking the graph for the full period, now we see that this investor has not been too consistent on his mix of asset allocation along the 120-month period. However, the changes are not as abrupt as we can see on other funds. So in general, we see that small stocks are the ones that are more more flat during the whole period. So I think this investor is very concerned on small stocks. Doing the style analysis for fund number 10, we see that this investor primarily focused on the US stock market with 31% going to large value stocks, 40% to large growth stocks, 4% to medium stocks, and 19% to small stocks. We also have a small portion going to Japanese funds. In that sense, we conclude that this might be a multi-cap core fund, given that the investor is going through all the range of motion in the stocks from large to small, and also a small portion on international. We also, on the investment strategy, see that this might be a more passive to neutral management, given that the asset allocation part is the larger component in this part. So the investor might be more comfortable putting all his assets on a specific index and not varying much from relative to the market. Given that the weights for fund number 10 were above 50% on the US stock market, we have to run the Fama French three-factor model regression. So in this case, we get a coefficient, the correlation coefficient of 89, an R-square of 79%, which means that the variation on the returns on these funds are explained 79% by Fama French three-factor model. In that sense, the alpha Jensen almost goes to zero, but still is not statistically significant, so we cannot reject that this be zero. And the other coefficient seems to be good, statistically significant, that being the market premium to small minus big stocks and the high value minus low value stocks.
For Fund 2, which we did do a detailed analysis on, it showed us that the fund manager was constant throughout the three sub-periods, both for asset allocation and asset selection. He maintained his asset allocation in EU funds, but gradually came out of the TB and SS funds, and starting from the second sub-period, he started investing in the LV, FV, and Japanese, while also diluting his allocation from the EU fund. For Fund 8, the second fund we had to do a detailed analysis on, we performed a Fama French three-factor analysis since the equity investment was greater than 50% of the fund. From this finding, from the regression analysis, we found that the intercept of the alpha was 0.00202, which is statistically insignificant as it is really, really close to zero. The fund manager, or the investor, in this fund seems to invest in risky assets, with the majority of the weights given to the international fund. In the sub-period analysis, it became apparent that at first when he invested in the TB and SS benchmarks, but then towards the second sub-period, we saw that he changed allocation and started investing in the US equity and European region fund.